I would say that you've seen a lot of changes in the Chinese market over the past year. So the stock market's off 30% since January. Auto sales have started to plummet. So in the first 5-6 months of the year, Chinese auto sales are up year over year, and they've been continuing declining. So in June and July, it was down 6 or 7% year over year. The early November numbers suggest that November sales were down 20% year over year. So I think you're seeing a major retrenchment in the Chinese consumer, which I think the Chinese leadership needs to pay some attention to.
We haven't seen you since the GM news either, and I mean, you know that company as well as anyone. Do you have, when it happened, and then given the president's response through tweets and meeting with Mary Barr, visiting the White House, what did it need to be done? Is there a way to retrofit those factories to make cars that sell? I mean, what should GM do? What should President Trump do?
Sure. So there are a few pieces to this. First, obviously, it's tragic when anybody loses their job.
Right.
I do think that Mary deserves a lot of credit for being proactive, the first GM leader in many years to be proactive in shaping and addressing evolving consumer needs. The reality is sedan demand, which was at the time of the financial crisis, 55% of total auto sales, is down to about 30%. And this is a retrenchment of GM's capacity by about 60%. Unlike Ford and FCA, which are totally exiting the sedan market, GM is reducing roughly about half their capacity. And so it's an unfortunate thing, but it's a reflection of the mood and desire of the marketplace. It still preserves their ability to participate in the sedan market if that demand bounces back at some point in the future. So I think it's a necessary step. I think the involvement by politicians at both sides, whereas the president or Democratic members of Congress, is unfortunate. I think businesses need to make decisions that are in the best interest of their long-term success, and I think that's what Mary's trying to do.
What's up with you, Paulsen?
I was curious about the Commerce Secretary. I wanted to ask him about.
Why didn't you?
Well, it's tough to get in with Joe. You know.
No. I'm sorry.
I wasn't I wasn't talking to him.
But I was curious about how much Trump and the Chinese coming to agreement to talk has to do with the fact that China's slowed and Trump suspects we're going to slow. And the window for him to negotiate this is running out, because how much does the tactic of our president go away if the U.S. slows to 2% growth? I think the game's over on negotiation. You have to kind of say we're both going to be done throwing tariffs at each other if both economies slow. So the window, I think, gets tight if we are indeed slowing. I just wonder how much that would take away end this tariff war, if you will, if the U.S. slows down.
Yeah, no, it's a great question. I don't know if it ends the leverage, but I think it certainly narrows the leverage. And so I think the president should be thinking about trying to strike a deal in the first half of 2019. You also have politics to worry about as you get into 2020. And so I think the more the year goes on, the harder it is to get to a deal. And it's not clear that the Chinese pain will exacerbate or be increased to the extent that it increases any leverage. So I think the first half of 2019 is the window.
You're not here to raise the specter of whether it's going to slow or not. You're here to tell us whether it's going to slow or not, which would be, by the way, 180 degrees from what you've been telling us recently. And that is that inflation's coming back. We're at 3.6% unemployment. Everything's overheating. We threw gasoline on a fire of an economy that already was ready to overheat, and now we got an inverted yield curve. I mean, what
I've been concerned about both sides of the equation.
We've been worried about commodity
slowdown as well as
concerned about commodity inflation for about 5 years, right?
No, but
okay, how long? How long?
Well, last couple of years, I think.
At least 3.
Yeah, since inflation, and we've
Are you backing off on that now?
Well, we've had commodity inflation over that period too, and that's part of the reason we had a year this year like we had, mainly because of overheat problems this year. Now, we went from overheating to where we got an inverted yield curve now? Well, that's what's caused the inverted curve to some degree is the fact that the economy has proved better than expected, and that we've been in full employment. Commodity prices did go up quite a bit and forced the Fed to tighten. And I mean, so a lot of that has kind of been some of the issue. I think the problem now is we're going to get the other side of the equation, that is the economy is going to slow. Well,
that's a switch for you then. This is a big. I'm glad you're here today, because that is definitely different than what you've been.
Well, I've been talking about the economy slowing down. The double-edged combination, Joe. The big question for me right now is, if the economy does slow, does it stop the inflation progression? You know, so if you think about Friday, we got a jobs report, and if you're a bull, what are you rooting for? Do you want it to be strong, in which case the wage number's up for the second month in a row and bond yields go back up, or do you want it to be weak? And with bond credit spreads already blown out, how much do recession fears even escalate more? And I think that the path for the bull is getting really narrow because you can fall off on too weak or too fast pretty easily here.
Could we have stagflation with just commodity inflation? It's just everybody waits for the wage component to really get the wage price spiral going. And
wage is up to 3.1,
right?
And it was not that long ago. It was 2-ish. That's a pretty 50% increase.
So you're worried about inflation and slow growth?
I think it's a possibility, and I think if we actually get both in any,
that's like the worst.
Then maybe that's the end of the cycle. If I think what could happen here is we slow this thing enough that we stop inflation pressure for a period, and maybe we scare everybody a recession's coming, and that might be a great buying opportunity for one more run.